Come back in. And we're talking about mortgage rates. You know, obviously the Fed has cut rates, so we've seen a dive in some of the rates, but is it a good time to refinance for you or maybe buy a new house if you're on the fence? Joining us this morning is Stewart Welch from the Welch Group to offer you some insight into those decisions. Good to see you, sir.
Morning, Mike.
Yeah, I think a lot of people right now are probably wondering, with interest rates below 4%, maybe it's a good time to go ahead and try this.
Yeah, it's a bit of a surprise. I think people just kind of moving along and didn't realize that rates have dropped. They've dropped to below the lowest point in 3 years. Yeah. So you can look at a 30-year rate is about 3.5%, and a 15-year rate conventional is 3%. And I think one of the big surprises is in the jumbo market. So jumbo is going to be anything above $484,000.
Okay.
So we just did one for $750,000. This was actually a second home, and the rate was just a little bit over 3%.
Okay.
So that is amazing for jumbo rates.
So and what should somebody's strategy be then? Because I know we heard in the past, like, if it's got to be at least a full percentage point for you to even consider because of the closing costs being, put back into the loan, which you'll have to, how long it will take you to recoup that money?
Yeah, I think use 1% as a rule of thumb.
Okay.
The longer you're going to stay in the house, the more it makes sense to consider a refinance if you can get a lower rate. It's a break-even point. It's really a mathematical calculation. But I think the first step is to look at your current rate and see if it is higher than the rates now, and then decide whether it's worth actually going through the calculation and determine if you can benefit by changing.
Yeah, and I would think if you're in a 30-year, now would be a good time if maybe you could have budgeted to get into the 15-year.
That's actually a good point. I hadn't thought of that. It is a good point. If you said I want to accelerate that, I can do it through a 15-year rate, because there's a pretty significant difference between the 30-year and the 15. So you can pick up an advantage there.
Pay down more on your equity for sure, and I know, but again, if you don't plan on being in the home that long, then it probably doesn't make sense.
Yeah, I think so. I think if you said I'm about to move within the next 3 to 5 years, refinancing probably should be off the table. But if you said I'm in this home for a good 10 years or more, look at the rates, see if this is an opportunity for you.
All right, anything else people should just keep in mind if they approach this process or they're on the fence right now?
Well, I think if you're thinking about a second home, you said I'm thinking about buying a lake home, a place in the mountains, again, really good time to do that. Okay. If it's a big house, the jumbo rates again look very attractive.
And when the Fed right now, at least, like they're going to stay this course unless something drastic happens with the economy one way or the other.
It does look like that.
Yeah. All right, Stewart Welch from the Welch Group. Thank you so much.